Good morning, afternoon or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, on this terrific Tuesday for what is going to be nothing short of another jam-packed daily market update. We've got a lot to get into. We aren't just going to tackle the realms of the cryptocurrency space in this video. We're going to talk about our kind of macro playbook for the markets and really the American economy, and what I think Trump is likely going to encourage that is actually going to see 2017 repeat in regards to what risk assets did broadly, the S&P 500 and, of course, Bitcoin. And that was all largely driven by a weak dollar that I think he's going to induce once again to ultimately stimulate economic growth, which we've got a lot of uncertainty around at the current state, obviously compounded by tariffs, the Zelensky-Trump interview. There's a lot of questions coming on the back end of a lot of things, and I think this is causing uncertainty. And if there's one thing the markets don't like, it's uncertainty. Also, monetary policy, there's been no kind of clear guidance, I don't think, really there. My opinion is they're underestimating, which is a surprise because markets typically overestimate, but they've done that for 2 years now in a row. They're underestimating the kind of cuts that we're likely going to get this year. And actually the kind of QE that I think is probably coming in 2025. And I think the reasons for that are the continued debt burden with the kind of apparatus that's been used to essentially fund that now having been largely drained. And I'm talking about, of course, the reverse repo and the TGA getting drained quite significantly over the past couple of days. The question then becomes, well, if they're going to continue to issue debt, who's going to buy it? And the TGA and the reverse repo are becoming a less fruitful option. And if they're going to lower yields, they're going to lower the kind of free market aspect of the bond markets. So interesting stuff to talk to you about in this one, but it might sort of, I think, help in regards to where we currently are with markets. A little bit shaky, just like they were in 2017. Lots going on. But I think there's going to be a resolve to it. And it has a lot to do with that macro picture. And also when we look technically at the cryptocurrency market, it's very much positioned for it. Let's start things off, though, however, with some crypto news. Trump may announce zero capital gains tax on crypto at the summit, which is taking place on Friday. We'll look at some takes in regards to what people are saying, like Tyler Winklevoss, obviously Brian Armstrong, the CEO of Coinbase, and Peter Schiff, who's now kind of admitted that Bitcoin is a good digital gold and even better than it in some cases, which is kind of bizarre, but is now proceeding to sort of go after altcoins. I have mixed feelings even about the reserve, to be honest, and a lot of things. But this is largely speculation, but the Twitter TDLR is President Donald Trump is reportedly considering the elimination of capital gains tax on crypto transactions held for more than a year, with an announcement possibly scheduled for the White House Crypto Summit on Friday, March the 7th, which is this March 2025. This news coincides with significant market volatility, with over $1 billion liquidated from the cryptocurrency markets in the past 24 hours, and Bitcoin's price dropping to 83,000. And if you're trading leverage with crypto, and I'm not going to hold any punches here, you deserve to get liquidated. You deserve it, 100%, because, I mean, I don't know how that even happens. So I've been doing this for years. I also have been mentored by people that have a very impressive financial career, that have been in markets for longer than I've been alive. I've said some of them I've actually watched trying to trade crypto, and the majority of them no longer do it because it just doesn't, it's not an easy thing to do. So why retail decide they want to add leverage to that and then try and trade the markets in the kind of environment that we're in? You know, you kind of deserve it, I'm afraid, if you're trading leverage. And we're very much against people trading crypto, period. You should be an investor. And obviously, we're kind of a specialist at working out. You know, we've got this broad backdrop that markets will continue just to go up and to the right until they don't. But historically, that's been the case. And there are cyclical cycles within that we look at, and we break them down into sort of 4 phases. So we'll see what comes out. I want to sort of, it's quite doom and gloom out there right now. I think retail largely has had enough. I speak to a lot of content creators that many of you guys I'm sure will watch, and they're all saying they're done. You know, they don't want to do this anymore, etc., which is interesting because I truly love what I do and I love reporting on this space. And I honestly think now there's never been a better time to be involved in the cryptocurrency markets. So we'll see what comes out. This is largely just speculation. A lot of liquidation is taking place, though. Of course, that's why you're seeing the market volatility that you are. Obviously, Hedera today doing very well on the back end of the NASDAQ news, which, of course, is, or Grayscale news, I should say. They've now filed, along with Canary Capital, their 19B4. Let's talk about what was announced yesterday, or really Monday, and some of the backlash that we've seen. So Donald Trump has, of course, announced a strategic crypto reserve, and he named XRP, Sol, and ADA. And then he went on to mention Ethereum, Bitcoin, and other valuable cryptocurrencies. David Sachs, of course, confirmed all of this, which I'm sure we'll look at in just a second. And there's kind of outrage. First, the Bitcoin maxis are in full meltdown mode. Because they still refuse to believe that you can have any application of a distributed ledger other than Bitcoin, even though it could have not been, but the way that they've turned it into a store of value for their own riches and careers, it's very much lame technology, Bitcoin, compared to the DLTs that we have today. But that's for another debate. I think there's been a lot of backlash with this. This is from Tyler Winklevoss. I have nothing against XRP, Sol, and ADA, or ADA, sorry, but I do not think they are suitable for a strategic reserve. Only one digital asset in the world right now meets the bar, and that digital asset is Bitcoin. Not sure what bar he's setting there. But in part, I do slightly agree. This should be a slow process. It shouldn't be, and I hold the cryptos that he's talking about. It's a good thing for me as an investor, but yeah, I think this should have been done a little bit more slowly. Let's start with Bitcoin, then let's go with Ethereum, then let's maybe do a weighted index, so that we can grasp this technology. There's probably a lot of backhand deals going on, and it's very interesting. You had that whale that just killed that short. When I saw 50x leverage, $4 million, worth $200 million, the trade, I thought, this guy's an idiot. And then the news comes out and I thought, okay, this is insider trading. And then they take it short on the back end of it. And they've now made more money on the short side. Obviously, Trump announcing tariffs. So something interesting is going on there. Many of these assets are listed for trading on Gemini and meet our rigorous listing policy criteria. But with respect to the strategic reserve, it is another standard. An asset needs to be hard money that is proven store of value like gold. And this is the interesting things with this. If you're going to invest in these cryptos as a strategic reserve, you can kind of make the argument for investing in technology companies, etc., etc., etc. It's something that I've got a lot of grey with. There's black and white things for me, in the sense that I do think these cryptocurrencies are truly transformational. But what's to say that there isn't going to be the Dogecoin put in the strategic reserve? And then I kind of have to go, I have mixed feelings, really. I think generally it's a good thing. Like I say, we hold a good portion of the cryptos that are involved in this. But also, yeah, I have mixed feelings myself. And this is from Tyler Winklevoss. This is, of course, from Peter Schiff. You can imagine. I probably don't even need to read this. You can already imagine what he's saying. Donald Trump, the first crypto president, just pulled off the biggest crypto rug of all time. Doubt it. A congressional investigation is now warranted to find out the following regards to this pump and dump scheme. Okay. Who authorized the Sunday Afternoon Post on Truth Social account? Who knew about the first post in advance and when they... So basically, he's just calling this a kind of insider thing. It's very interesting that, although Peter Schiff taken with a pinch of salt, a big pinch of salt, taken with a bowl of salt, exciting to learn more. Still forming my opinion on asset allocation, but my current thinking is just Bitcoin would probably be the best option. Simple and clear story as a successor for gold or to gold. If folks wanted more variety, you could do a market-weighted indexed of crypto assets to keep unbiased. But probably option one is easiest. Yeah, and of course this is on the back end of David Sachs. And you've got people like Adam Back, who I'm not the biggest fan of, I've got to admit, sort of really backing this up. I'm not a Bitcoin maxi. You guys know that. I'm very much not. I think there's a far broader and actually potentially more impactful use of distributed ledger technology than Bitcoin. But I am somewhat on the fence about this. I can see it from both sides. That may annoy some people, but I've got to be honest with it. And I think just all this nonsense is just people just don't really know what to do with it right now, which is interesting. And if you look at Bitcoin's price today, I mean, it's undoubtable that retail would have got hurt in this. This pump was caused by, and look at where we are today. You know, I still think, of course, the broader trend is up. We'll talk about that towards the end, and we'll tie that into our kind of macro scenario that we're going to look at as well. There is sort of moving away from the microcosm that is the cryptocurrency space and how it fits into the broader macrocosm, which is the macroeconomic environment and everything that falls within that. A lot going on. So I very much have backed Trump in the sense that for Americans and their best interests, I think he's the man for the job. Now for the rest of the world, potentially not, because he's American first. And people need to ask themselves that question. Do you want America for America, or do you want America for everywhere else? And it's a lot more of a complex argument than just that. So I'm not trying to really, and I am oversimplifying it. But he is still raging this kind of tit-for-tat tariffs. My opinion is this is largely posturing. And that actually, if anything, tariffs might lead to lower tariffs for everyone. He's talking about reciprocal tariffs. So if you look at what he's levying on Europe, obviously Europeans very upset about it, or the UK, we charge them that. So he's basically saying, well, I'll charge you the same. And what that might do is come up with some negotiation where actually these are lowered or levied completely. So it always interests me, and this is just human nature, how quickly emotions and sentiment towards something change. Just like this pump that was caused by him announcing that, oh, he's a genius, he's finally doing it, and now everyone's like, no, you know, this is horrific. And it's all based on price action. There is a bigger picture, and I want to talk to you guys about that, because the bigger picture for me is really what Julian Bittle put forward. Julian Bittle obviously works for Raoul at GMI, Global Macro Investor. I think Julian's got some really good takes, actually, and I think this is one of his better ones. And what he's essentially highlighting is this has been highlighted for a while here. I've looked at it extensively on my Patreons, and we're now mapping out a path forward for the dollar that ultimately sees risk assets do well. And the scenario that he's looking at here is Trump interest rates are far too high. The last time Trump said something was too high, it was the dollar back in January 2017, just days before his inauguration. And you can see in the black here, we've got the last sort of route that the Dixie went on. I'll show you it in just a second, and we'll look at risk in regards to it. And then we've got where we currently are today. We're a little bit further down. I think we're heading towards that head and shoulders target. I've already got one that's been made on the 10-year yields. Here's what he said. Our companies can't compete with them because our currency is too strong, and it's killing us. Last year, he also called recent strength a tremendous burden on US businesses. Trump understands the impact of a strong dollar, and the same logic applies to interest rates. They suppress exports, hurt corporate earnings, and slow economic growth. What happened next? Well, the dollar began a significant decline. Remember, Dixie's a basket, but you're really looking at dollar strength. And remember, if the dollar's strong, you're looking at Bitcoin, USD, etc. And there's an interesting divergence there with the dollar actually coming down, but crypto doing the same thing. And I think that's because of this bigger picture playing out, but there being turbulence in us getting to there. You know, turbulence in us getting to our destination. This was, of course, setting the stage for one of the most pivotal macro moves we've seen in years, triggering a melt-up in risk assets. Deja vu, I think so. Let's see how this plays out. And again, interestingly, you know, so this is really, and let's get this on a far broader time frame. Let's start with the dollar. I won't go into the shorter time frame. So this is, of course, 2017 and the dollar price action. And this is where we are today. And we, of course, have lower targets, or a target that's being worked towards on the Dixie. And I think it's going to come down to the sort of 100 mark. And the flip side for that is what that meant for Bitcoin. You can see Bitcoin had a really epic rally here. I think another one is coming. I think, if anything, we're just higher than we were here. And I think technically that's supported by Bitcoin and what we look at consistently. And to sort of further that, it wasn't just Bitcoin, of course, it was risk assets more broadly. Let's get this on log so this makes a little bit more sense. You know, you can see this sort of rally that the S&P went on having. I mean, the S&P, when the dollar started its downtrend, was sort of elevated from its all-time highs, just like you really are today. And I think if you look at how this initially started, it started with a little bit of sort of wobble and chop and uncertainty, and then the sort of rally really occurred. And that was all based on a weak dollar, which I think we're going to get once again. And I look at things like yields, et cetera, to sort of summarize that. And of course, when we look at Bitcoin specifically, you guys all know that we've got a lot of technical confluence in regards to the direction we think it's going. But more broadly, the markets as a whole. So that's my kind of economic view. I think technically the markets are supportive of that. I think certainly when you look at the altcoin sector, it looks good. Bitcoin really bearing the brunt of this. It is interesting that there was a lot of institutional selling going into all of this. And that is something that plays on my mind. And really that comes from sort of the ETFs. We looked at that in regards to CoinShares report. On some really happy news, certainly for me, as HBAR is my largest holding, we've always been very honest and transparent. I know it's many of yours, and we're proud to have helped some of you on that journey. But there has been a NASDAQ 19B4 essentially filed by Grayscale for a HBAR ETF. And HBAR is a beautiful chart in my opinion. So really, guys, I'm going to love and leave you on that note. A lot of uncertainty. Don't be too hard on yourselves. And this is one thing I've learned as an investor, as a trader. You want to try and aspire for perfect when it comes to entries, when it comes to this sort of stuff, accumulation. But often that's not the reality. And you guys are investing, those of you that are, and remember, it's up to you whether you invest or not. It's entirely up to your own financial peril. In the most volatile asset class that there's ever been, it's not even been allowed to become an asset class. All the nonsense that we've seen with the SEC, et cetera, at a time when there's more geopolitical, social, and economic uncertainty than there's probably ever been. And I really don't think you guys are doing too much of a bad job. And of course, there's going to be frustration that comes with that. Like I say, I actually speak to a lot of content creators out there. I'm good friends with quite a few of them. And they want to give up because they can't deal with the kind of abuse they're getting. Because, of course, number go down. This is your fault. Number go up. I knew this would happen. That's the kind of environment. And I would ask people to see the wood through the trees and focus on a bigger picture like the one that we lay out day in, day out here on these updates. And the thing is, we don't just lay it out. We give you the picture. Not just technically how the cryptocurrency space, what the fundamental narrative is going to be, what's going to see it get there, and macroeconomically what we're expecting to take place. And that is essentially a 2017 repeat. Remember, rates are the highest they've been in a long time, and so is monetary policy in regards to being restrictive. There's an undoing of that to come. I think we've got a great time in risk assets. You just got to overcome the kind of hurdle in regards to where we currently are today. But I do think we'll see resolving that. That's it from me, guys. Stay tuned, and I'll keep you up to date on a daily basis. We're not going anywhere. See you all in the next one.